All right, guys, so welcome to another exciting 10 Trade webinar. My name is Tobi Okunuga, and I'll be taking you through tonight's webinar. What we're looking at tonight is very, very simple. We'll be continuing our series on trading strategy, looking into the world of institutional trading, all right? The last time we held one of this series, we thought about market structure, right? So I taught you how to spot real market structure, right? We talked about the swing highs, the swing lows. We talked about the major highs and major lows, minor highs and minor lows, right? So we looked at market structure. And tonight, I want to continue talking about the next concept in this trading strategy series, talking about institutional trading or smart money concepts. All right, give me a second, guys. All right, so Talon Spark said, I missed that lesson. Please, can you do it again someday? So what I recommend is for you to watch the replay, right? Just go to the 10 Trade Academy's YouTube channel. So when you go to the YouTube channel, you see all of the replay. I think we had the session about 2 weeks ago. All right, so just search for it, you see there, all right? Because before we go over it again, it might take a while, you know, because we still have a lot of concepts to cover, right? So please go through the YouTube channel and get a replay, all right? So tonight we'll be talking about possibly, we'll look at liquidity concept, all right? We'll also look at the concept of supply and demand and why it is important. All right. Okay, so in the next 40 minutes to 1 hour, we're going to take a look at these two concepts. Why it is important to you to use as a trader, all right, and the effectiveness of these two concepts. Now, trading like the institutions is simply spotting the footprints of the market makers. By market makers, I mean the people or the institutions that can really move the market. All right. So before price goes up or down, there are some footprints, there are some clues here and there, okay, that can give us an idea as to what price wants to do. All right. So the concept of market structure, liquidity concept, supply and demand is to help us spot the footprints of what the big boys want to do in the market. It helps us know exactly where price wants to go. All right. So let's start by talking about liquidity. All right. So this is the first thing we talk about today, and I'll just quickly brush through it. All right. So when we talk about liquidity, all right, liquidity is simply where money is in the market, all right? Where money is in the market. Okay, so when we say liquidity, that means there's a lot of money in this area or the zone. Okay, the zone where money is in the market, right? And so let me give us an analogy, and then I'll come back to explain this concept. Now, if you have been trading for a while, you would have had an experience such that when you take entry from this area for a buy, for example, and then you put your stop loss somewhere below here. Let me use this with red. The stop loss is this red thing. All right. Now you are here on a buy order, and you find that a lot of times price would approach your stop loss, and then as soon as it takes out your stop loss, one way or the other, price now starts going in your original direction that you want price to go. All right. So what happened? This happens a whole lot to a lot of forex traders. Okay. So what happened here is simply what we call liquidity grab. Okay. It's called liquidity grab. So your liquidity has been grabbed because your stop loss is where your money is. Now, a lot of forex traders or retail traders are also putting their stop loss here. Okay, that's why the big boys know that, okay, there's a pool of money in this zone. All right, so they'll first of all take out your liquidity before moving price in that particular direction. Now, why is it that every time the liquidity is being grabbed before the move happens? It's because, so let me give you a scenario, because buying and selling happens at the same time. Buying and selling, okay, happens at the same time. So let's do an analogy. All right, so you go to the pharmacy, okay, to buy paracetamol. Now, the pharmacist at the pharmacy is going to sell that drug to you, okay, because you are also ready to buy. All right, there's no way you can buy that drug when somebody is not ready to sell to you, right? There's no way that pharmacist can sell that drug when there's nobody ready to buy. So buying and selling happens at the same time. For buying to occur, right, there has to be somebody willing to sell, okay? For selling to occur, all right, there has to be somebody willing to buy. So it goes hand in hand. Likewise, in the foreign exchange market, all right, so we are on a pair called Euro GBP, right? For the big boys, that's the big banks and financial institutions, for them to move price up, for example, you know that they are the ones responsible for market moves, all right? Because we as retail traders, we don't have the volume, okay, to really move the market, all right? So let's say the market makers wants to buy this particular currency. So that means they want to move price up. Now, you must ask yourself, if they want to buy, who are the people that is going to sell to them? Because you can't just buy a commodity out of thin air. There has to be some category of people that are going to sell to you. So for the big banks and financial institutions, for them to buy, they need to look for a sell order. They need to buy at somebody's price. They need to buy from somebody willing to sell, right? And a lot of times, retail traders and other market participants are the ones that are going to sell to this category of people. Now, in this case, your own stop loss, right, is a sell order. So if you want to, so let's assume that this zone right here, this green zone, is a support zone, right? We all know that we buy at support, right? That's what we were taught when we're at beginners level, right? Now we buy at support, right? And then in a support zone, you are going to put your stop loss here, right? Right. So you are buying this currency pair, and then your stop loss is somewhere here. Now, your stop loss is, you are simply saying that's a price in which you want to sell off your order if price goes against you. All right. So your stop loss is a sell order. That's why a lot of times, because these big boys, they want to move price up, they need to find people willing to sell. So they're going to move the price down. They're going to go down to take out your own order. Okay, your own sell order, and then they buy at your price, and then they move price in the direction where they want to move price to. It's as simple as that, right? On the flip side, if they want to sell a particular currency, for them to sell, that means there has to be people willing to buy. There has to be people that want to buy. That's the only way they can sell. So let's say over here is a resistance zone. Okay, we want to sell as a retail trader. What we taught, we're trying to sell at resistance. Okay, so over here, you put your entry for the sell here, and then your stop loss is somewhere above here, right? Now, for a sell order that you have entered here, your stop loss is a buy order. It is a pending order, all right? Now, when the big banks and financial institutions, once they want to move price down, they want to sell this particular currency pair, they need to buy at some people's price. They need to find people willing to buy, right? And then they're going to move the price up, okay, to buy, to sell, right, from you, right? They want to sell, right? So they will now sell to you at the price when you are willing to buy. So they move the price up, okay, take your order, okay, and then they sell all the way down, right? That's why a lot of forex traders have this particular, they have these particular issues, okay? So what you want to start considering as a forex trader is, before you take entry, you want to start considering liquidity first before you take entry. You want to be sure that, okay, liquidity has been grabbed first before you take entry. If not, most likely you are going to beat the liquidity that will be grabbed, all right? So you don't want to start entering trades like every other retail trader, all right? You want to wait for the market makers to grab liquidity first, right, before you go ahead and take entry using your entry strategy. Let me know if you understand this concept. Type in a yes if you understand this concept. Let me know if we are good to go. Okay, type in a yes if you understand this concept. Okay, give me some feedback, guys. Give me some feedback, guys. Let me know if we're on the same page. Let me know if you understand this concept called liquidity. Samuel, do you understand? TechnoSpark, do you understand what I've said so far? So nobody's giving me a response. Does it mean that we don't understand? Okay, Techno understands. All right, Samuel, I didn't do you understand? Sonny Patrick, you're welcome. Guys, it's very, very important that you engage when I ask questions. Now, the only reason why I'm asking questions is because I want to carry you along. All right. If I'm not interested in carrying you along, I wouldn't ask you questions. All right. So to get the best value from this session, you want to engage. As I'm asking questions, please respond as fast as you can. right? And also be free to interject and ask questions in the chat box. All right, so Summer said, you understand. All right, good. So this happens a lot. So let us talk about how do you spot liquidity? What are some pointers to spotting areas where liquidity will be grabbed? So the first thing that I'll talk about is the equal highs and lows. All right, equal high and lows. So that you see something like this. Something like this. All right, so this is an equal high, equal low, and this usually would happen at an area of resistance or an area of support. Okay. All right, and then something like this as well. Wherever you have market structure like so, equal highs and equal lows, it can be like this or exactly the same level. Just know that sometime in the future, a lot of people would have taken entry here, because at a point in time, this particular zone was a resistance area. So a lot of people would have put their entry here, would have taken entry here, and then their stop loss would be above the zone. So many times you see that price will later go up, take out people's liquidity, people's stop loss, all right, before eventually going all the way down. Likewise, okay, price will come down and take out people's stop losses here, because over here, people would have taken entry for a buy here and put their stop loss below the zone. All right, so price will come down and grab people's liquidity, all right, before going all the way up. So what you want to do as a trader that understands liquidity is that before you take entry for a buy or for a sell at any level, you want to wait for liquidity to be grabbed first. All right. Once you see something like this happen, you'll not be looking for your entry somewhere here. You look for your entry above liquidity is where you want to be looking for your entry. Okay. So because you've spotted liquidity, you wait for liquidity to be grabbed, okay, before taking entry. All right. Another keyword for liquidity grab is called, you see people call it stop hunting. All right. Stop hunting. Once people's stop losses has been cleared, is a good zone to start looking for entries, either in a sell scenario or in a buy scenario. Okay, Ambrose, Annie, you're welcome. All right. Now, another way to spot liquidity in the market. Now, I must reiterate that equal highs and equal lows, a lot of times you see this happen in a support and resistance. So always in a support and resistance zone, there would always be some form of liquidity grab. All right. So as a matter of fact, when you spot a support, okay, let's do that. When you spot a support zone, so let's do the support zone, because a lot of people know that this is a support. All right, you're not the only trader that knows that there's a support zone here. So a lot of people are looking to take entry from this support, and they're taking entry here. They are putting their stop losses beneath this zone. All right, so this here, you and a million other forex traders are taking entry at the same zone. You are putting your stop loss at the same area. Okay, these stop losses that you're putting here, this is liquidity. okay, waiting to be grabbed. This is orders that the big banks, financial institutions will be looking to target so that they can move price in the direction they want it to go. So you see that price will come back down to tap liquidity, take up the stop losses, all right? Then the real move will now happen. All right. So when you spot a support zone, you want to wait for liquidity grabs first. And in a support zone, you see equal highs, you see equal lows. All right. Now, unless another way that we can spot liquidity, I'll show you how this plays out on the chart shortly. Another way to spot liquidity, all right, is trend lines. Okay, trend line liquidity. So there are a lot of traders that trade trend lines. So a trend line is something like this. So when you see price in an uptrend, so this is an uptrend, right? Something like this. So you see a lot of traders draw out a trend line, mapping the higher lows together. Okay, this is this. So this is a trend line. And what it means is that the next time that price retraces into this trend line, okay, a lot of traders are looking to take entry here. Okay, what it means is that people's stop losses will be beneath this zone here. Okay, so trend line liquidity, a lot of traders will be looking to take entry for a buy here. All right, so that means people's stop losses are beneath this zone. All right, so over here is a liquidity zone. Okay, so more often than not, you see price will go down, grab people's liquidity, okay, before going all the way up. Okay, so in essence, what you just want to start doing is to start thinking like a retail trader. What will a retail trader do in this scenario? Which zone will an average trader take entry? So once you spot those zones, you know where people's stop losses are, right? It is beyond where people put their stop loss. That is where you now want to start looking for entry, right? So your own entry is where people's stop losses are. It's as simple as that. Okay, talking about liquidity, because liquidity has to be grabbed first. That is how the market works, economics. Buying and selling happens at the same time, right? Law of demand and supply. It happens in real time. For price to buy, somebody needs to sell, right? For price to sell, someone needs to be able to buy. Okay, I don't know if that makes sense to you, right? Likewise, on the flip side, for a sell scenario, if you're talking about trend line, we have a sell here like so. This is a downtrend, and then you see traders use a trend line to connect the lower highs. So they are doing this because the next time that price gets into the zone like this, they're looking to take entry for a sell somewhere in the zone. All right. So you, as somebody that understands liquidity, you are not interested in taking entry for a sell here. You know that people's stop losses is going to be above the zone. All right. So you are interested in taking entry after people's stop losses have been grabbed. So you want to wait for the market makers to grab liquidity. Okay. So somewhere above this zone is where you now want to start looking for your entry for a sell. It's as simple as that. Okay. So where people's stop loss are is where you want to be looking for entry. You will not be taking entry where everybody else is taking entry. All right, so let's go to the chart and then see how liquidity play out. Okay, I'll just pick it at random. Okay, at random. So over here, what can we see here? So let's start from this zone over here. Okay, let me show you exactly what price does when you understand the liquidity. Okay, so this is a support zone. All right. Okay, this is a support zone, right? And it's actually a valid support zone. Now, next time that price came into this zone, like so, you see that this green candle was formed. Okay, when an average trader sees this candle, right, he's trying to take entry because he thinks that, okay, there's about to be a bullish momentum. All right, so you take entry here, your stop loss obviously is going to be somewhere below, okay, below the support. All right, and then you can see if you are taking entry here, you can see how price went all the way down, took people's stop losses, right? And then ultimately, what did price do? Price went all the way up. Okay, so that's an example of liquidity grabs, and you can see the equal lows here. Okay, is an equal low like so. Price took out this low. Okay, that happened at the support zone. Price took it out, and then the real move happened. Okay, so they sold to buy. Okay, on the flip side as well, right in front of us, you can see that price came up here, and then suddenly you can see the move down. So this is a verified resistance area. Okay, you can see the equal highs here. Two touches here, equal high like so. And what the price do? Next time that price came into that zone, right? A lot of people were lured. They were lured into this move. You can see this hammer here. Okay. Now, if a trader sees something like this, he will think is a rejection or activity to like a reversal candle. So a lot of people would have been lured to enter this trade. And then you can see the red candle, you can see this. So this to an average trader is a zone to sell. But what did they do? They lured people into the market. If you are selling here, obviously your stop loss will be somewhere above here. Okay, what did price do? Price took out people's stop losses, and then ultimately what did price do? Price went down ultimately. Okay, so that is how they lure people into entering trades. Okay, ultimately they take out your stop loss, and then price goes in the direction that you already planned. All right, so what the market makers, what they do is they create market scenarios that suits the entry criteria for an average retail trader. Okay, so they create a scenario because they are also aware as to how we as traders, how we trade. They know where we take entry. They know where we put our stop loss. Okay, now if you have been trading, now there's something called order book. Actually, for some people that are trading cryptocurrency here, you even if as a retail trader, you even know the prices where some people are willing to buy, where they've set pending orders, right? Likewise, they know exactly where people's orders are, okay? And easily they'll move the market there, grab your order and move price in the direction that you already planned, okay? Let's find another example. Okay. Let's delete this. So let's do this trend line. So this is a trend line here, like so. Okay. So an average trader taking entry on a trend line will be looking to take entry here at this, at the touch of that trend line, they're looking to take entry. All right. So somewhere here. And you can see if that person has a very tight stop loss, for example. So this would be a normal entry and stop loss zone, for example. All right, you can see our price actually went up a bit beyond where you take entry. Okay, just wicked. So this move actually wicked out this previous high right here. Okay, so people sometimes were taken out before price moved in the direction. Now, what you notice is that if you're able to spot the liquidity properly, every time that liquidity was grabbed, right, the next move will be very, very strong. Okay, you can see this move like so. All right, you can see when price grabs this liquidity, you can see this strong move to the downside. It's always very, very violent. Okay, when liquidity was grabbed here, you can see the move up, violent move. Okay, likewise on the flip side. Now, let me also give you an example of liquidity, of trend line liquidity. So let's say you marked out this move as a trend line, for example. Okay, you can say this is your first touch. Say this, okay, this. And then maybe you want to take entry here. You can see how price would have easily taken you out. So let's say you want to take entry here. Price would have taken you out. You can see people's liquidity was grabbed. Okay, price went up, grabbed people's liquidity, and ultimately still dropped. All right. So you as a retail trader, as a smart money trader that understands liquidity, it is after liquidity has been grabbed, after people's stop loss area has been hit, is where you now want to start looking for entries. Okay, it's as simple as that, guys. Okay, so you want to take entry after liquidity has been grabbed. All right, so we've talked about equal highs and equal lows. All right, so we've talked about trend line liquidity. All right, we've talked about how price grabs liquidity. So we've looked at it on the chart and seen exactly how it looks like. So what I want us to do, guys, is for you now to be able to spot how the market makers, how they grab liquidity. But before you can know where liquidity is, you may be able to spot where a retail trader will be trading from. All right, you have to be able to spot it. All right, so let's look for more examples to suit this. So check this out, guys. It is everywhere in the market, everywhere in the market. So for example, check out this high, like so. Okay, this is a high, this is a resistance zone, right? You can see equal highs here. Let's make this. It happens all the time. Okay, equal highs, first touch, second touch. So this is an equal high. When price got there the next time, right, you were lured into the market to take entry for a sell, but that was short-lived, right? Eventually, price had to come back up to grab this liquidity. This is an equal high. Okay, price came back up to grab this people's stop losses that was here. This is what was grabbed by all this wick. And once it was grabbed, price eventually went down. You see that the move down will now be very, very aggressive. All right. It happens every time. Okay. Give me a second. Am I communicating, guys? I'm just showing you the importance of knowing where liquidity is so that you will now be better placed as to where you'll be taking entry. Okay, this will make all the difference for you once you start applying it to your trading strategy. Now, I believe that if you have a trading strategy that has some amount of win rate, so let's say the win rate of your system is let's say 40% win rate. So you take 10 trades and then you win 4 trades out of 10. You can greatly increase your win rate by only taking entry after liquidity has been grabbed. All right. Regardless of your entry strategy, once you start applying liquidity concept to it, you'll be winning more trades because you are taking entry after they grab liquidity. So there's no more liquidity to grab. So your stop loss will be well protected. All right, well protected. So there's another example. All right, check out this high, for example. All right, this. Okay, people's stop losses will be here. This is the resistance zone. All right, so when price comes back here, people will be looking to sell in this zone, this area, cluster resistance, right? And then you have people here that were lured into taking entry. Eventually, price went up, cleared all the liquidity here. And then eventually you can see price moving down aggressively. All right, aggressively. So when liquidity has been grabbed, all right, the next move is usually going to be an aggressive one. So guys, what I want us to do and get familiar with is to go on your charts, any currency pair at all. Let's go to another currency pair. Any currency pair at all, you see how liquidity has been grabbed. Before the real move happens, there's always going to be liquidity grabs, especially at a reversal zone, like a support zone or a resistance zone or a supply and demand zone, right? You want to take entry first. Take entry after liquidity has been grabbed. Now, the next concept that we'll talk about, which is a concept of liquidity, of supply and demand, will help us tie these liquidity concepts all together, because supply and demand will now tell us the zones where you should be looking for liquidity grab, because true liquidity grabs would happen at specific zones, right? It's not every zone that you look for liquidity, right? When it comes to trading smart money concepts, we take entry as supply and demand zones, right? And liquidity also helps us to identify true supply zones and true demand zones. Now, unfortunately, because of time, right, we're supposed to end our session by 7 p.m. So this is 2 minutes to 7. And if I'm going to deal with the concept of supply and demand, it's going to take an average of a bit over 1 hour for me to finish. So here's what I'd like to do. I'd like to I don't want to rush supply and demand because already we are out of time. So I'm going to push for us to have this particular session maybe sometime this week, let's say Friday or Monday. Okay, so I'm going to talk with the team so that we can have this session of supply and demand in a few days from now. Because now, before we have that session, what I want you to do is to go on your chart and see how price is taking out liquidity, all right, before moves happen. How price has liquidity before moves happen. Okay, so take you can find a time to do that tonight. You can see our price took our liquidity here. All right, and ultimately price went up like so. Liquidity again and then went up. So your assignment, guys, before we meet for the next time, either on Friday or next week Monday, I want you to go to your chart and just play with it, see how price is taking out equal lows, how price is taking out equal highs, how people's stop losses are being grabbed at areas of support and resistance. All right. Let me know if I'm making a bit of sense here. Victor E, you're welcome. I think Victor came late, so you might need to watch the replay. Sonny Patrick, Olamide, let me know if you got a bit of value in this session. Because of time, I would not want to go into supply and demand tonight. We are out of time, all right? But let me know if we now have a better understanding of liquidity concepts and how to spot liquidity in the market. Give me some feedback, guys, if you understand. Okay, technically said you understand. Yes, all right. Who else understand the concept? Olamide, do you understand? Samuel, Sonny Patrick, Victor E. All right, Sonny Patrick said, well understood. Awesome. So guys, look forward to the next session on supply and demand. I think it's going to change the game for you once you learn supply and demand properly, right? Because economics, the market is simply economics, right? And it's based on the concept of supply and demand. So I'll be showing you how to spot supply and how to spot a demand zone. And then we'll tie everything, we'll now tie our knowledge of liquidity as well, okay, and supply and demand to arrive at a very, very interesting perspective of the market. All right, so Olamide says, sorry, I came in late, no problem. So we cannot watch the replay to this session. It will be uploaded on the YouTube channel tomorrow morning. So look forward to this session. All right. So for everybody listening to me right now, if you want to, because taking you through this journey of smart money concepts is going to take several weeks, right? If you want to compress time frames, right, and get access to everything at once, right? I'm offering a one-on-one session to everybody here right now, education, right? And all you need to do to get access to all of these contents and education in real time, all you need to do is to fund your 10 trade account with at least $500 US, right? Once you do that, reach out to me, right? And then I'll walk you through a one-on-one session whereby I show you all of these things in real time, right? And then you can really compress time frames, right? Again, all you need to do is to fund your 10 trade account with minimum $500, right? Once you do that, you would have access to a 1 hour one-on-one session with me where I go through this concept with you. Okay, so that way you understand a lot better. Okay, so once you do that, you want to reach out to your account officer, and then I'll be notified, and then we schedule a session. All right, I'll see you on the next webinar, guys. I want to thank you for attending this particular session. Right, I hope we are having an amazing trading week so far. Some amazing setups are forming or have formed this week already, and there are still many opportunities that's going to align this week. So be on the lookout, right? Be sharp and take perfect setups only. All right. Have a remarkable trading week, guys. God bless you. Bye.